evening, everyone. Welcome to the Mumbai Angels Network's Reboot. Blockchain offers multiple benefits for several capital market users, and on our blockchain edition this month, we have industry leaders talk about public blockchain for financial institutions. This reboot is brought to you by Tezos Foundation. Tezos India assists individuals and entities to use the Tezos blockchain. The goal is to grow the Tezos community and advance Tezos in India through education, meetups, and partnerships. The session today is divided into 40 minutes of panel discussion and 20 minutes of Q&A. We have received several of your questions already and have shared them with our panelists. We hope that most of them will be answered today. You may also send in live questions using the chat window. Our team will curate them and we'll try our best to get them included and answered. Our panelists for the session are supratim.chakraborty, partner, Khaitan & Company. As partner in the corporate and commercial practice group of Khaitan & Company, leading transactions and mergers, acquisitions, and joint ventures, Supratim has advised eminent clients in relation to information technology laws in India, including data privacy and cyber security related issues. Recognized as a notable practitioner in the IFLR 2020 rankings, he has been categorized as a recommended lawyer in the prestigious RSG India Report 2019. Supratim is a member of ASSOCHAM's National Council for FinTech, Digital Assets and Blockchain Technology, and has spearheaded some of the consultations on the draft Personal Data Protection Bill. Supratim holds a GDPR FAS certification and a DPO certification. He has spoken at eminent forums and has authored several articles for renowned publications. We also have with us Gokul Alex, Chief Innovation Officer, Epic Knowledge Society. Gokul is an engineer, economist, and educator experimenting with emerging and exponential technologies. He loves the creative convergence of programming, philosophy, poetry, psychology, physics, with a passion and perspective. He is the Chief Scientist of Fusion Ledger and the Chief Digital Officer of BTCD Limited. Involved with both Spherium Labs and Pantheon Labs, Gokul also guides blockchain entrepreneurs across the world. He is one of the global 100 blockchain experts selected by Lattice 80 Network and is ranked in the top 20 of the global thought leaders on AI, big data, blockchain, cybersecurity, cryptography by Thinkers 360 platform. Our next panelist is Scott Littlewood, Southeast Asia Head, TZ APAC, an early adopter of cryptos and the co-founder of the first fully regulated institutional-grade crypto fund in Asia. Scott is a former emerging markets finance professional specializing in asset protection and cross-border asset structuring for private individuals, trusts, family offices, and asset managers. In 2018, he co-founded an independent digital securities custodian in Singapore and is the former head of digital asset management for a $1 billion asset management firm based in Singapore and the Middle East. We also have with us Kumar Gaurav, founder and CEO Kasha. Kumar is a serial entrepreneur who was awarded an extraordinary status by the United States government and is amongst 100 most influential people in the world, excelling his work on blockchain technology. He is nominated amongst the world's top 50 innovators from the industries of the future market and tech era in the UK. Kumar is a founder and CEO of Kasha, which is the largest crypto-friendly neobank based in London. Recently, Kasha has raised $5 million to expand its banking services in India. With this, Kasha plans to tap into the growing crypto user base in India. The session today will be moderated by Pranav Sharma, co-founder and managing partner, Woodstock Fund. Pranav is a seasoned professional with over 15 years of leadership experience who firmly believes that for individuals, entrepreneurs, and enterprises to build successful and financially sustainable businesses, financial well-being and wellness rests at the core of such success. Pranav is also advisor to Alliance Block 2 and Orion Protocol 3. During his professional journey, Pranav has taken on leadership roles covering functions and verticals such as business development, sales and distribution, asset management, private equity, and insurance. During his initial years, he gained experience in manufacturing and renewable energy space, both as an engineer and as investment professional, and later was part of several strategic roles in the financial services sector. Thank you all panelists for joining us. We welcome all of you again, and over to you, Pranav.
So thank you very much, and I'm so excited to be with all of these people who are so eminent and who have created so much of impact in this space. And I think without doing much of ado and spending more time on pleasantries, let me straight away jump into the questions. So let me just open up this conversation by asking something very simple. There has been a debate about public blockchains versus private blockchains, and in many ways, a lot of excitement has been confined to public blockchains, but the adoption has been a focus and area of focus in the private blockchains. So Gokul, maybe you can take a dig at this and say that what is your perspective on this?
Sure. Thank you, Pranav. Thank you, Mumbai Angels Network, and I'm really glad to be part of the family with Tezos Foundation and Inblox Network. First of all, I would like to say that the classification, the public versus private blockchain, is partly ideological, partly technical, and partly philosophical. And perhaps in the long run, this may not hold any reality, because I am sure even when we started thinking about internet, if you look at the history of internet, we had thousands of nets. FidoNet, ARPANET was just one among them, which eventually became the bigger umbrella for internet. So likewise, perhaps 30 years down the line, we will only be talking about a family of nets or family of chains. But having said that, the current moment, when you look at the ecosystem, there is clearly a hierarchy. And in that hierarchy, we would like to see some of them as larger networks and some of them are smaller networks. That is the premise, right? Bitcoin is still the largest network, and it is even now inspiring everyone with a lot of innovations. And RippleNet started sometime later. They had their highs and lows. Ethereum is always disrupting, surprising everyone, and Tezos has created a new paradigm of self-amending ledger. And the Hyperledger family of platforms are always bringing in a lot of robustness, and Corda is bringing in a lot of engineering finesse to this. So when we look at this, when you look at the people who are building these blockchains, they're clearly not concerned whether this is public or private blockchain. The demarcation is in the, like a poet said, like I think John Keats, the beauty lies in the eyes of the beholder, right? So likewise, the chain's openness is in the hands of the adopters. So when people take it, right, and use it, that is where the openness versus closed differentiation comes in picture, right? How do you take the technology and use it to liberate the value, economy of value? So people embrace Bitcoin, and there was a strong reason for opening up the financial ecosystem, because we were clearly seeing all stagnations, slowness, all the challenges during the 2005 to 2009. Clearly, the mainstream finance was on its perils. And that is the time we needed a really great shake-up moment. And Bitcoin is the right thing to happen then. That's why the world has moved in. Because we had enough of complex products, right? Credit default swaps and all those things, right? Secondary derivatives, all of them really created an intricate web in the world of finance. And Bitcoin really opened it up with the beauty of cryptography and consensus.
So Gokul, if I can get Scott into the conversation.
Yes.
So Scott, I think Gokul made a very important point that somewhere the market opened up. because of advent of blockchains. And definitely what he's saying is that public blockchains and private blockchains, it doesn't matter. What matters is applications and what kind of impact they can create in a
Yeah.
different thing.
To summarize my point, I would like to say everyone, be it the people who are working on apparently the closed blockchains, they also want to integrate into the world of finance, integrate the world of economy. There is no one who really want to keep it private unless they are working for highly confidential use cases for government, defense, or some very strategic sectors.
Just to step in there very quickly, with some of the advancements with Tezos in particular and other public blockchains, you do have, like, for example, we'll have ZK snarks and meta transactions. So, that privacy feature will be available on public blockchains as well. So you'll have the added benefit of a public blockchain with the sort of the privacy centric features, which, enterprises are looking for, which is why they're turning to, private blockchains at the moment. So, it is coming very slowly. But that is where we're seeing this sort of trend going forward.
So Scott, what is the receptivity of the enterprises and I would say seasoned capital market players when, as a Tezos Asia Pacific head, you reach out to them?
Well, it's very good. Otherwise, I wouldn't be on this panel. Yeah, it's getting taken up slowly but surely. We've seen a lot of financial institutions and a lot of large enterprises, even government level, that have, typically had sort of proof of concepts. And sort of, sorry, hello. We've seen sort of enterprises and governments that have built proof of concepts and products and solutions on other public ledgers like Ethereum. They're now facing a lot of issues with gas fees. For example, that's why they're looking for alternatives, more secure blockchains. That's why we're getting a lot of sort of inbound inquiries. But typical example is, not in Asia, but in France. You'll probably have all read that Société Générale is part of a consortium for the Central Bank of France, which is trialing a digital euro on Tezos. And also digital securities and settlement against that euro Tez. In Asia itself, we're seeing in Singapore and beyond, we're seeing licensed entities that are building out on the securities space on top of Tezos, sort of security tokens on real estate, on art, precious metals. A couple of the grantees from the foundation are actually building a gold and silver token on Tezos from India itself. Very, very excited for that to launch. But yeah, financial institutions, enterprises are very receptive. There is a lot of sort of hand holding, a lot of sort of, information gathering as to, why should we consider public over private? But it's a movement that is in process, and the adoption is taking up. It's very exciting to be in the ecosystem.
Basically, Scott, what you're saying is that technology doesn't seem to be a bottleneck anymore, and there's a lot of receptivity on the side of.
There is some bottlenecks, but I don't want to plug Tezos more than other protocols. But one good thing about Tezos is we have the on-chain corporate governance, and it's a self-amending blockchain. So if there is a feature that is missing, then anyone can propose it, and then the ecosystem can vote for that to be sort of adopted onto the blockchain. There is a process for that. So, it's a blockchain of last resort. So it will constantly be amending to basically suit the needs of the market, which I think is very important.
Right.
So it might be a bottleneck now for some enterprises and some products, but in the future it will not be.
So basically, Scott, what you're saying is that the current evolution of technology and the future evolution of technology is geared towards addressing all of these needs. So that doesn't seem to be an impediment, so much of an impediment anymore, especially because governance layers and various other aspects are coming together. Correct. So Supratim, I wish you to come into this conversation, because I think the missing piece, and that is what most of the market participants perceive, is the regulation, and that too proactive regulations. So I'm asking a very nuanced question to you potentially, is that what do you see as the status of regulation when it comes to integration of, let's say, blockchain in capital markets and financial institutions? And do you think the regulators are proactive? So two separate questions embedded into one. So over to you, Supratim.
No, I think the answer is well known to everyone. The level of proactivity that we observe is kind of appalling, to say the least. Uh, in every sphere, Pranav, if you observe that, technology has far surpassed the laws that we had, okay? And we keep on thinking that the patchwork of laws that we have, it will help us to still attend to the situation. Let me take a simple example of Information Technology Act, okay, which we think is really the end all and the omnibus law which can cater to every situation possible. It was never meant to be the way it is today. Okay, it kept, things kept on getting added to it. So now it has got data privacy, cyber security, digital, digital signature, electronic signature, etc., etc. So it has become like a entire ecosystem in itself. Somewhere the rules and regulations which have been framed under that has gone beyond the mother legislation, but no one basically bothered to even challenge that. So we have lived in that ecosystem, and we still believe that we are very happy with it. Um, of course, coming to specifically the question right now, a lot of more proactivity is required because if you ban something, for example, we have this mindset, we are observing this, that firstly, this whole differentiation that has been created that, crypto is bad, blockchain is good, and we can do a lot of things. Point is that if I ban something, I would not know how it will proliferate. But if we regulate something, at least we have visibility of what things are. And I think a large portion of the market really are okay with the regulation part of it. Okay. What needs to be done at this hour is more proactivity in thinking that how we will, regulate this space properly rather than simply thinking, okay, a good and a bad situation in a black and white manner, and sort of saying that this part is bad and therefore you ban it, and the remaining we can work with. And there also we do not have a regulation really on blockchain per se. So my belief is that we have to be proactive, not, first thing. Secondly, create umbrella legislations. Okay, tech and these spaces are evolving at a very, very rapid pace. If we had some, for example, let me take a very crude example. If we had a law for pagers, it will be in dustbin by now, right? So we have to keep broad brushed legislations under which we let the players evolve. So technology and innovation should not get stifled. Let them play their role under the mother legislation, under the umbrella legislation. That is the way to go about it.
Good point there, Supratim. I think in a way what you are mentioning is that the regulators have concern around broadly three areas. One is systemic risk,
Yeah.
and they believe that somewhere as a country, as a developing nation, we may face systemic risk. The second is AML issues. Of course, money laundering is something which could be extremely challenging, and I think the third area is definitely taxation, sort of leakage of revenue, etc. Which could potentially happen because of these in case there is like open innovation or open architecture which is let loose. But yeah, I totally agree with you that it can't be at the cost of stifling innovation, etc. So let me get, I think, one of the innovators who is on the panel, Gaurav, into this conversation, because he has done something difficult by building a bridge between traditional finance and crypto, if I may use that word as a space. So Gaurav, how has your journey been, and did you find it extremely complicated and difficult to build this bridge? Especially what you have built is a very important and basic bridge for capital markets to be built on it. Over to you to share your perspective.
I think Gaurav needs to be unmuted. I think
Yeah.
his.
Gaurav, you need to unmute yourself.
Yeah, I unmuted myself. You guys can hear me? Yeah. Hello? I'm clear?
Yes.
Yep.
Okay. Uh, yeah, definitely. Our challenge was not actually crypto or blockchain. When you start any kind of banking application, I think we start from the challenges which it's one of the highest challenge which you have, which is the money laundering and terrorist funding. How, as an organization, we ensure that our infrastructure is not used for money laundering and terrorist funding, and that's what's the biggest challenge, which is in cryptocurrency, or let's say blockchain slash cryptocurrency, because end of the day it's all cryptocurrency. Now we are talking about regulation, but the regulator doesn't know exactly what to regulate. Right now, they just know that there are some tokens which is being sold of any price which anyone wants, and then you have a market makers, market manipulators, and exchanges, everyone coming into the picture. So the challenge for regulator, what we have seen in crypto or in a blockchain, to understand exactly what it is. I remember still when we were starting, we started banking actually in UK. So one of the first regulator we had to talk to was Bank of England and FCA. We are talking early 2015. And those days, Bank of England, if you are enter into the Royal House and you talk about Bitcoin, everyone was like, no, let's not use this word in this house, right? Let's not speak about Bitcoin. So we have seen that side of a regulator where a Bank of England and FCA was not ready to hear about Bitcoin. They were like, let's talk blockchain, let's talk about public ledger, let's talk about distributed ledger, let's talk about ABC ledger, whatever you want to say, but let's not talk about Bitcoin. But so starting from there, we became one of the largest neobank based in London, regulated under FCA, and keeping all the funds with the Bank of England. And today we are more or less at least have more than 60% market share when it comes to moving money for cryptocurrency. So billions of dollars we are moving every day, and purely for the Bitcoin and cryptocurrency transactions. So yeah, it was challenge, but the challenge what we have realized is that if you convince the regulator that the systems which you have enough money laundering, anti-money laundering policies, I think they are fine with the innovation. It's just they don't want their banking or their infrastructure to be used for the otherwise. For example, we just had the FinCEN paper, and London actually was found, UK was one of the worst performer according to those papers. We had 3,000 cell companies, billions of dollars through London. India, I think India, every big bank was involved in money laundering and terrorist funding. More than 44 banks were named. So it's be or without crypto, the challenge for the regulator is the same. Now, the question is that be as an innovative company or be as a crypto-friendly company or a company using emerging technology, can we solve those problems or we can increase those problems? If we can solve those problems, we have a green and go ahead from regulator.
Saurabh, I think you sort of hit the nail on its head, and in many ways, this sort of completes the argument from Supratim's side. And I think it's an evolutionary journey in many ways. And I think that the journey has come very far over the past 3-4 years. So sort of this brings me to a conclusion, at least in the first initial part of our conversation, that in terms of integration of private enterprises with, let's say, blockchain as a space, or let's say capital markets with blockchain as a space, for the past 3 years, the industry has evolved terrifically. Regulators have become much more open, and to an extent that even participants have become evolved. And the technology has also become very robust as the way, I would say evolving, but extremely robust as the way Scott mentioned earlier. So this brings me to another part. Okay, now that we have got a very strong foundation in place, seems that all the building blocks are coming together. So the question is that what are the different use cases that can be built on top of this, I would say, foundation, if I may, put it across. So I think maybe I'll, throw this question at Scott. Since you mentioned about tokenization, you mentioned about various other applications with traditional banks like SocGen, etc., and so on and so forth. So what do you see are the applications of future in the DeFi space, or let's say in capital markets as a space, which can evolve into something really huge over a span of time? So over to you to share your perspective.
Yeah, very, very large question. One issue with, I think we need to distinguish between a number of things here, right? One, you have the crypto side, like your Bitcoin and your ETH and your cryptocurrencies. And you've got to distinguish between your blockchain securities and using that technology for some underlying asset, for example. And when you look at the FI space and security tokens and asset-backed tokens, there's already existing regulation in place. Each country has their existing securities laws that you must abide to, right? This is just a technology that's going to help bring efficiencies to issuance and trading and settlement. But the regulatory framework is actually already there. and you can apply this technology to that framework, which is what we did with a previous company. But we are seeing great movement in this space, especially on the tokenization of real world assets, art, precious metals. But I do think it's still relatively early. It's a very sort of slow mover, but it's getting implemented very slowly. For example, in Singapore, the Monetary Authority of Singapore has not issued many licenses to players that wish to be in either the issuance space or the secondary trading space. I think there's maybe one in each category, right? So I don't know if that's like protectionism of like the local entities, or if they're just not sure if they can open up the floodgates yet. And then when you talk about DeFi and you're looking at securities, and you have to take in consideration like the cross-border securities laws, right? Like if I'm a fund manager and I want to sell my fund to somebody in Switzerland, I've got to abide to the Swiss securities law, the US law, other jurisdictions. So you can't just suddenly issue a security token in Singapore and then have that traded willy-nilly across the globe. You've got to still abide to the securities law. So I think that's going to be a bit of a stumbling block, and it's going to be more, I don't want to say centralized, but it's going to be more sort of stuck within each jurisdiction for now. We might see like some sort of like bridges between different jurisdictions. We are slowly seeing those, but it all comes down to regulation.
So I think this is, yeah, please go ahead.
Yeah, I would like to add, so as Scott mentioned, and because he's facing this on everyday basis, where maybe projects were trying to build on Tezos and then they were get stuck because of regulation. I remember in 2017, I was vice president for the project called Responsible Gold. OECD was the part of that. Actually, OECD, who is the one who coined the term called responsible gold, to have a gold which is free from slavery, a gold which is free from all the evils which the gold industry have, and till 2020 we are talking. It's one of the industry which is very dirty. You have a lot of amount of slavery in the industry when it comes to gold, and regulation around the world, as a government around the world trying to solve this. And working at that project and writing and making this infrastructure, what I have realized that the problem is not the technology. Problem is also not I would say the regulation at the very higher level, because when we see the regulation in the Europe, it's fine. In the US, it's fine, but it's actually become very complicated when you put the regional factor into this. Like how you're going to solve, let's say, I'm not saying that the project with the World Gold Council and OECD, everything got failed or what, but the problem, how you're going to solve the problem of African gold mines where you have Chinese guns and you are trying to produce a responsible gold. It's the problem which is more complicated. So that's why sometimes I don't want to be the part of the conversation where we talk about blockchain is going to solve all the world problems, because it's not. Because the problem is much more complex in the real world. Yep. And it's, I think the innovator and everyone working on the blockchain, at least at the infrastructure level, I see that they are much ahead to build whatever they want. We have a Ripple, we have Tezos, we have, I know, EOS. There's so many in public infrastructure which is available to build a lot of wonderful things. But how you're going to solve the psychological problem, how you're going to solve the political problem, those are the bigger issue, which is, and which will keep happening. And I don't see any resolution coming, at least in next 5 to 10 years. For this, maybe early, I don't know. I wish if it can come early, but we are trying to talk about solving a problem which exists on this planet for more than at least 200 or 500 years, or maybe since the humanity started.
So basically, Gaurav, you're making a very important point, and I think which is somewhere there, everywhere, and I think Supratim may, add more to this. There's always an incumbency factor, right? In every industry, incumbency is basically status quo. And status quo is because there are existing structures, whether it could be organizational structures, power structures, monetary structures, which have to be dismantled for something new to emerge. And it can't be disrupted, because disruption is also not good for any of the incumbents. It is neither good for incumbents nor for those who are going to become incumbents, right? So it's going to be always a transition, and the transition sometimes for certain massive changes takes decades at times.
Yeah.
So Supratim, I think Gaurav has touched upon something very important, and I was in any case going to hint. So it's great that he stepped in and he spoke about this. So Supratim, you have seen multiple industries, right? And you've seen how industries like telecom have evolved. You mentioned about Information Technology Act. You mentioned about a given example that let's see if you're going to build a regulation around pager, it's going to take forever, right? So just to focus the conversation on capital markets, blockchain, and fintech at the intersection, and that to a global play. Do you think this journey will ever happen, or like the way Gaurav is sort of hinting that this is going to take a long period of time because this has multiple moving parts, wherein there are a lot of incumbents and they have their so-called accepted ways of doing business. So over to you.
Right. So I will stick to the regulatory part only and how I observe really this moving in India. And this is purely my personal take on the entire I would say ecosystem of laws and regulations that are panning out in India. Firstly, it's taking a lot of time. Okay, from the inception stage to actually things getting rolled out. Okay, there are two ways of actually functioning which we observe. If something has to go through the entire process and passed in the parliament, uh, we are observing a very long stretch of time. Let me take an example again. Let's talk about the personal data protection bill. It started in August 2017. It has not still been debated in the parliament. Probably early next year we will see it, but all consultations have happened, etc., etc. Let's take another example of this RBI diktat, which came suddenly that let's go ahead and ban crypto. Then suddenly Supreme Court comes in and says no, this was excessive usage of power. It is unconstitutional. You should go down the right route if you really have to have a proper restriction on any particular asset. Point is that so these two types of movements are being seen in regulatory space really. One is let's move in breakneck speed, but not through the parliamentary process. We will have regulations and these maybe sectoral regulators really churn out these diktats and you follow that. And the other methodology is that we will follow this entire process, but this will take ages, right? I think none of these is the correct approach. And it's really the middle path. You should, sorry, you should go down the correct route of having this debated in the parliament and come out with a law. But that again cannot take forever because by that time, this entire ecosystem would have moved a complete decade. So this intersection that you're talking about and this interregulatory discussion needs to happen ASAP as of yesterday, and a law rolled out which has been properly debated rather than taking knee-jerk reactions by sectoral regulators and then doing a postmortem of it later on and putting the entire business ecosystem into a limbo by then. That's my take.
Mm, I would,
Sorry, I
Pranav,
think
I can hear you. So you are,
Okay, great.
Supratim, you are fine. Yeah.
So, so Supratim, I think that was great insight. I mean, there's no doubt about it that somewhere the system is going to change. Gaurav, sorry, I have to take it to Gokul because he has
Okay.
been looking at me with a staring glance that I'm not getting a chance to speak.
Yeah.
Gokul, since you waited very patiently, I'll throw a very interesting question, which will also sort of interest the audience a lot more. So I'm shifting gears now. So, what do you see are the potential in terms of in the DeFi space? I mean, there is the crypto lending borrowing has been there for like past 2-3 years. There's been a lot of derivatives, synthetics which have been emerging. Tokenization is what Scott spoke about, and the regulations becoming favorable, etc. So, what do you see as the various kind of applications which are sort of emerging DeFi space, which can potentially also create tremendous value in the traditional capital markets through financial engineering? And a very interesting part towards the end of this question is where do you see investment opportunities? I believe this end of this last part of this question would interest
Yeah.
the audience here. Over to you, Gokul.
Thank you, Pranav. Quite a lot of questions, and I'm just really happy to take all of them. But I would like to say it from, excuse me, one. Pardon me, can you hear me?
Yeah.
Yes.
Sorry, I got a call online. My point is, I would like to touch upon the dynamics that Gaurav and Supratim were talking about. See, what happens when the regulator is laggard is that the industry charts out a new territory and it moves on that way. In fact, let's see that's the thing that happened in e-commerce, right? When e-commerce started, or when Amazon and eBay has grown, and now in India, GeoMart is coming up. Our regulators, our governments were not comprehend this market, electronic commerce, the e-commerce market. So it's all about the market. If you see in the DeFi space, what we are seeing is the emergence of something known as radical markets. This is the exact dynamics we are not able to comprehend in the mainstream. What we are seeing is in the mainstream, we have so much of wealth, capital, hold up, stale and stagnant. But at the same time, all the people are moving into a space which is radical market. Crypto is not, a, I would say, a mainstream market. This is where you think about new possibilities. Even before this call, I was talking to an investor who is so much happy about the dynamics. Like he's saying that lending in crypto space is more transparent, is more like, there are all the institution or the crypto investors happy when they're lending money in the crypto space because it's transparent. This is not only about transparency and trust. It is about a lot of adaptability, a lot of flexibility, a lot of engineering, a lot of privacy, right? All these possibilities never existed. See, it was not a problem of imagination. We had all the imagination in our mind. See, all this fintech, all this financial innovation started way back in 1800. If you look at the history of financial innovations, we had all the seeds of radical markets, even in the early 19th century. But what was, really stopping them was the archaic laws, the archaic mainstream banks and governmental structures. I'm not pointing fingers at anybody, but right now a long road has already been established. And now people who are building that road are building radical markets. So in this space, what we are currently seeing is slow absorption of mainstream finance into it. Right now, major chunk of investment and assets are B2C. But what we are seeing right now, like in Singapore, Switzerland, France, and different other places is like things like invoice financing, invoice factoring, right, are coming into crypto space. Do you know the impact of it? It will be phenomenal when you see investors and companies bringing in their invoices into crypto space, right? They bring their complex financial products into crypto space. Crypto is ready to absorb all of this. This is the most interesting part. You have all creative people, right? See, all the creative people here who are able to design contracts, applications, privacy, what all you need, people are building it on crypto. So this is the reason why in the DeFi space, we are seeing invoice factoring coming up, new kind of non-fungible tokens. That is a huge possibility. You can see that non-fungible tokens, it's just the beginning of a great new journey. It started in gaming, art, and new, these are things which were locked up in mainstream for a long time. Who was able to extract the value from art, the games, right? All of these were monoliths. If you look at the history, right now, all of them are becoming micro entities. So this is the birth of radical market that we are seeing in the DeFi space, and new lending protocols are helping us to give transparency and trust. Likewise, new way to build assets. You're discovering more possibilities. Like Gaurav was telling about it, the responsible gold. Now, not only responsibility, we are able to add more possibilities, more permutations and combinations on really valuable assets like art, gold, and different other assets. So what we are definitely going to see is, like, you know something, right? We do a lot of swaps, like, oh, maybe in 2017 atomic swap, when we talk about atomic swap, right, all the people were telling comparisons between the telecom swaps and the memory swap, but now swap is between different kind of tokens. This shows the liquidity. See, I would like to say one point. This is the main power of crypto: liquidity. Liquidity in finance, right? It is making finance so fluid. And due to this, we are going to see more dynamics, more action, more traction in the space. And this is the key. And this is how crypto is accelerating innovation in crypto.
So basically, Gokul's verdict is that this is just the beginning of a massive a DeFi raging bull in many ways.
Absolutely. We are going to see a libertarian radical market, emergence of a libertarian radical market world over.
Yeah.
And all the regulators will just become facilitators. There is no bigger role for regulators worldwide. It will just be to become facilitators of this revolution.
Got it. I think there's a question that came in. So I just want to briefly sort of link back. Basically, the question was about that they can't really understand how crypto lending is more transparent than, let's say, conventional lending. So I think here, let's say, maybe I can add from my experiences that let's say if you are an NBFC or a bank and you're doing lending, basically you're pulling the assets into an unknown account, which is not transparent. It's not visible to people. So what kind of rates that you charge is usually governed by the shareholders, or let's say promoters, usually of the banks or of the NBFCs. So in that sense, it's a black box. But in case of blockchain, the advantage is it is traceability. And it is not only traceability for 1 year, 2 years, but it is traceability of lifetimes, if I may put it this way. So if you may be reborn, you may find that your transaction is still on the blockchain. Yeah. So anyway, just on a lighter note on this point.
It's not only that, Pranav, because I saw the question, but it also, I think for India, it makes more sense because we have two big cases where more than 25,000 crores have been issued without having any collateral, right?
Yes.
So in case of Nirav Modi, I think there was 14,000 crores have been given without actually having any payment for collateral. And it's all done by just one small branch. So imagine that how much black box exists in the traditional finance, that even the transaction size, which is actually almost equal to the market cap of 1 day trading volume of Bitcoin, is just sniped, is just gone from the liquidity and nobody able to recognize. In case of Vijay Mallya, in case of so many different cases which happen in India. So I think lending, at least Indian would understand much better the DeFi lending than any other country, at least who suffered in last 10 years.
So, I would like to add to what Gaurav said. See, 8,000 crore, Vijay Mallya was around 5,000 crore, right? See, despite this, right, our banking system has not collapsed. Do you know why? It is interesting. See, the point is, our value of money that we are generating in India is so much more. Even after you guys are, we are seeing gold thieves taking away so much money from our market, we are still, our banking system is not collapsing. That's because we have so much of real fixed capital being generated, the real goods and services being generated in India, which is unbanked. This is the reason. Even if there is a black hole in our banking system, we are not collapsing because so much of people are unbanked. And this is where we have to bring in lending pools. See, crypto is creating new phenomena called automated market makers, AMM. You know what is the possibility of AMM? You don't need any middle markets. You don't need any middleman. If you bring in an automatic market maker in agriculture, you bring an automatic market maker in supply chain finance, you bring an automatic market maker in lending space, Indian real worth of Indian labor and Indian capital will be known. That is when India will become a real liquid economy. And now there is one more possibility in the world of crypto. It's called quadratic funding. You know, when you bring in things like quadratic funding, what really happens is even the last man in India, will get access to finance. So it's not even microfinance, the real finance, quadratic finance will open up huge possibilities of like movement of money. Over to you, Pranav.
Yeah, Gokul, those are amazing insights. I think in many ways what you're hinting at is that DeFi could be the elixir which will get us to the sustainability goal of financial inclusion.
Absolutely.
Right? So it has that power. So I think, so maybe I'll, get Scott and then Supratim to jump in and say that, do you think DeFi can be that elixir, or it's like an untamed horse, which requires a lot of taming by the regulators, or let's say by, different, even internal governance. It could be even internal governance as well, especially what we have seen with liquidity mining, going out of hand in many ways, and, a lot of experimentation around governance, and a lot of challenges there. So just, open question to both of you. What do you see? That is it like an untamed horse, or is it something which is like an elixir and which can potentially create financial inclusion over a span of time?
So Scott, first.
Yeah. Odd question to ask, but over to you. I think you can share an interesting perspective there.
It's a tough one, really. A long way to go. I mean, when you look at DeFi in the crypto world, you've got your sushi swaps and your uni swaps, and on Tezos at least we have decentralized exchanges, which is a step in the right direction, but that's also going to eventually will have some issues with regards to like KYC and what tokens are being traded and where are the counterparties. So we're also working on digital identities, which I think is going to be very important in the future. But again, I think it's very early for the DeFi. I think DeFi is a very hot topic, hot word, but I don't think there's actually much substance behind it at the moment, to be honest.
I think you shared your perspective, Scott. So I think Supratim, over to you. You're smiling. So does that smile means that this is one frenzy and one big mess that regulators are going to eventually unravel? Or do you think it's like true financial engineering and innovation which is going to create a lot of opportunities?
No, you mentioned that this is an untamed horse. Honestly, personally speaking, I do believe that this can be tamed. It's how you regulate it, right? Again, I go back to my previous point that I was making, that how do you regulate is the real point. Have you seen the Indian Penal Code? How many changes has it undergone since the time it was written down? From that example, let me now pick up an example of Indian companies like the new Companies Act or the IBC, where every other day you will find changes being brought in. Okay, so the point is, how do you craft that regulatory ring fence is the real art. The problem that I observe right now is that that art somewhere is going amiss, and there is a big lack in understanding of the technology itself. Okay, there are knee-jerk reactions which are happening. So the key point to be tackled here is that how should I have a broad brushed umbrella legislation around this, firstly. Secondly, understand the technology and its how it has evolved, how it could evolve, and bring it into the mainstream in a timely manner. That's my point.
Awesome. So I think there is a significant consensus between all of you that this is an irreversible trend. This is something that we are sitting on. If I may use the same analogy, we're sitting on a horse, whether it is tamed or untamed, it's going to gallop, right? So I think regulations are going to come by, technology is going to get evolved. Eventually, various financial engineering is going to happen. So with COVID situation coming in and all of us working from home as distributed teams, so this is practically the final question, just to like land this conversation to a point. Do you think that the trend will accelerate now towards adoption of digital assets and digitization? And what we could have taken like 5 years or 10 years to achieve, we may land up achieving in 1 year. So quick comments by all of you. Maybe anybody of you can take it forward. Just quick comments from all of you, because all of you are experiencing COVID. It's not like it's not happening in particular location. All of you are impacted. So all of you have a view on this. Anybody who wants to go first?
Yeah, perhaps I would give my try. See, when we look at COVID, uh, I do see that COVID has brought in a lot more scrutiny in the world of finance and investments, especially everybody is I would like to say that COVID is not an isolated event. COVID is happening at a time when we are seeing a lot of regionalization in the world economy, right? We have been hearing about new world order, right? And we are being, if you are following what the people like Ray Dalio and others are speaking in the world of investments, there is a lot of change in the dynamics of capital, and it will definitely continue. And what will happen is, in this time frame, we are going to see a lot more shift in capital flow towards economies where there is uh, the new world finance emerging. I would like to say the finance which is the connected to new digital products. For
So,
example,
Gokul, I'm sorry, I'll stop you short, and we are running against time, so I'm going to take it over to Gaurav.
yeah,
Gaurav, what's your verdict? Maybe in a couple of lines, what do you think? Gaurav is around. Then if Gaurav is not, then Supratim, over to you.
Yeah, thank you. I think I'll quote what Satya Nadella said, that we have seen 2 years worth of digital transformation in 2 months. And from the pure regulatory space, I would tell you that initially there was a wait and watch function that we were observing, that, let's see maybe a few more months and then we will start legislating and looking at,
Excuse me.
these laws, which also are laws around, digital transformation and tech related regulations and laws. But now we see that phase has gone away, and I think somewhere there is a push to have things moving faster as compared to the initial phase of COVID.
All right, awesome. Scott, over to you. Since you're looking at more like Asia Pacific kind of a perspective, how do you see this evolving? Do you think that a lot of this life journey has crashed for adoption of digital assets, or it's going to be still a very long road?
I think the live journey has crashed. No, I think it's actually expanding at a very rapid rate. If I look at Singapore, for example, and I take the crypto side, at least, the Monetary Authority of Singapore has put out the Payment Services Act earlier this year, which is actually giving a regulatory framework. And we're now seeing sort of, global crypto companies from the US and Europe rebasing in Singapore because of the friendly regulatory regime. So I don't see it slowing down, actually. I think there's also going to be a very a talent drain in Singapore. But where the COVID part comes in, I think there's going to be, Singapore is a very small economy, and it's a very limited amount of talent. So to bring in the talent is going to be very difficult, as this like protectionism of the Singapore economy and wanting to train and employ Singaporeans. So you're not going to be able to bring in your high flyers from the US and Europe to come run this business in Singapore. So I think there's going to be a big talent drain, which I think is going to be the only sort of blockage, at least in Singapore, and I'm sure it will happen in other countries as well.
Got it. Gaurav, over to you, if you are still around. So I think Gaurav is correcting. So I think Mumbai Angels, can you open up to questions? If we can, let's say, have questions from...
Yes. So Pranav, while you start on some of the offline questions that we'd gotten through the audience who had logged in, I'll take a look at the chat box and see if there are live questions.
Definitely. I think there is one question which I will throw it open because we have covered the rest of the ground. So one question is that, considering how NPCI has been so successful in implementing an instantaneous real-time digital payment architecture, which is UPI. UPI has been very successful, if everyone knows, and in many ways other countries are also adopting this as a standard. And this is one of the most advanced in the world. Why haven't we had another government institution come up with a similar blockchain platform to help public institutions work more efficiently? It will reform the way we vote, how public institutions spend their money, amongst many things. So why is there some sort of a resistance by governments to implement let's say, blockchain technology for building a UPI kind of a framework? And just to share with, let's say, Scott, for example, for somebody who is not so much involved in India, in a way, UPI creates like a passport for you to transact from one point to another in many ways. So the transactions have become extremely seamless in India. And this is being looked at by US, Australia, etc., and various other countries to see that similar frameworks can be adopted. But when we look at Ripple, for example, I'm just taking one example as a case in point, or Ripple network, various banks have adopted Ripple networks and practically got instant settlement, done. So why are governments not adopting let's say blockchain technology at scale to ensure real time and instantaneous and potentially even low cost settlements to happen? So just maybe a question. So Scott and Supratim, maybe over to both of you. If one of you can pick up into this question and share your perspective.
You want to go first, brother?
No, please go ahead. I'll chip in.
No, maybe it's not really a question for me, to be honest. In Singapore, I look at payments and we have like, nets, which is like interbank transfers. I guess it's sort of similar to what's happening in India. Why are they not using blockchain technology? I don't think the knowledge is there yet. Maybe they will in the future. There's the Project Ubin in Singapore, which is looking at this. So I think it's again, like I said previously, I think it is happening, but it's happening slowly. But maybe India are the innovators here for this space.
Can I add my point, Pranav?
Yeah, please go ahead. And Supratim next. Yeah.
I really believe there is no such intent. That is the reason. There is no intent from the part of government to bring in that much of efficiency in the formal economy, right? So see why UPI is a big hit. It's in the B2C space. I'm again saying, if you want to bring in more efficiency in the B2G, B2B space of capital and finance, it's a different game. So once you bring in more efficiency, more accountability, and more transparency in the formal economy, in the B2B space, the entire world is going to change. And I'm sure governments just want to take the role of a facilitator. That is precisely the role we are seeing from the governments from some period of time. And that is the reason there is no such intent. If you see, I've been working on, everybody, all of you may be seeing the policy from governments, right? They're all saying we'll integrate blockchain with Aadhaar, we will integrate blockchain with DigiLocker, we'll integrate blockchain with land registries. Why not with finance? I don't think that is because ignorance of technology or lack of capability from the side. It's because the government architecture is currently in such a way. In finance, they just want to be a facilitator.
Got it. Supratim, over to you for
so firstly, full disclaimer, this is not a legal question, not a legal answer, but I think I go back to your point, Pranav, which you're making, that there are at times a hesitation in change and dismantling or transitioning to the new, big thing, I would say. That is where I really see the roadblock, where we can clearly see that there is a lot of intention in the government in basically doing things which are big in this space, but probably they want to take measured decisions because and all the points that you mentioned right in the beginning, there are issues pertaining to say AML, taxation aspects to be taken care of, security, etc. All of this plays in